Hey everyone, this is Nick Diobertis teaching you financial modeling. Today we're going to be solving the lab exercise on finding cost of debt given financial and market information. This is part of our lecture series on the discounted cash flow evaluation model, focusing on the cost of capital portion of the model. So we covered all of the material on the cost of debt, and then these are the two lab exercises which test knowledge of that material. So here in the first exercise, we are given some details on a market bond, the coupon rate, the par value, the price, and then the maturity versus the current date. And we are coming up with the cost of debt for this company. So let's go over to a Jupyter Notebook to solve this. So I'm going to use NumPy's rate function in order to determine the cost of debt based on this bond information. So I'm going to import NumPy as MP, as is the convention, and then I'm going to add variables for these different quantities that we looked at. So there's the coupon rate. We have the price is equal to 1042.12. We have the maturity is 3 years. And then the face value is 1,000. And the tax rate is 35%. So to calculate the cost of debt, now we can use NumPy's rate function. And first we want to put the number of periods, so that's n. And second, we need to put the payment. So the payment, we do need to calculate that as well. So the payment is going to be equal to the face value or principal value multiplied by the coupon rate. So that should be $70. Yep. So we can put that next in here. And then after that, we need the present value, which is going to be negative price. And then we put the future value last, which is the face value of the bond. So with that, we get that there's a 5.4% cost of debt pre-tax. And then in order to get the after-tax cost of debt, then that's going to be just taking the pre-tax and multiplying by 1 minus the tax rate. Then we can add a nice sentence here. The pre-tax cost of debt is, and then put that with percentage formatting, and the after-tax is, and then put the after-tax with percentage formatting again. And then I know in the following problem, well, let's look at the following problem real quickly because that was the first problem. In the following problem, we're going to get financial information for Walmart from stockrow.com and calculate the cost of debt using the financial statements approach. So again, we're going to be calculating the cost of debt, and we're going to want to show the pre and post-tax cost of debt. So I'm going to go ahead and create a function which does these last couple of parts. So so I can say, call this show cost of debt, and it takes the pre-tax cost of debt and the tax rate, and then it does this calculation of the after tax, and then it shows both. So now I can use that again here in this problem, and I see the same. and it will help us out in the following problem. So for the following problem, now we need to get that information from stock row, the financial information, in order to calculate the cost of debt. So I'm going to go ahead and click the stock row link here. And it hits the home page. There I can search for Walmart. Comes up a Walmart's page. I can go to financials. And then here we're on the income statement. We are going to need that. So download that, and you want to save it, named as the income statement. And then the balance sheet is going to be necessary as well. So I'm also going to export that, save that as the balance sheet. So now I can import pandas so that I can load these data files into data frames. So first I will get the income statement as a data frame, read Excel on the Walmart income statement, and I'll do the same for the balance sheet. Read Excel on Walmart balance sheet. Okay, so now let's look at the income statement. And it looks like it loaded in correctly. And we have the dates as the columns here. And we have the statement line items as the first column. So maybe what will be better to be able to pull items out is to have the line items as the index. So I'm going to set the index column as column 0 when I load it in, and that makes that happen automatically. And then I imagine we have the same thing going on in the balance sheet data frame. Seems to be a similar structure. So for that one as well, I'm also going to set the index column as 0. And now that looks better as well. So we want to calculate the cost of debt, pre-tax cost of debt first. And to do that, we're going to take the interest expense and divide it by the total debt. So first thing we got to do is pull out this interest expense. So we can start by trying to pull out the appropriate column here. The problem asked to use the July 31st of 2019 data. So let's go ahead and pull that out. Okay, July 31st, but that did not work. We got an error about that. So let's look at what the columns are. We can see that the columns are actually a date time type and not just a string, and so we can't look it up by a string. Thankfully in Pandas we do have this toDateTime that we can use on a string or on a series, and that will convert that into a date. So let's try putting that in here instead, and that is able to pull the appropriate column. So I'm going to go ahead and save this into a variable so that we don't have to keep typing that, and so that we could easily change out this date later and have the analysis update for the new date. So now I can pull the appropriate date data out like that with date. And now out of this, we want to get the interest payment. So that would be this non-operating interest expenses here. So I'm going to copy that. And there we got those interest expenses. So I'm going to save that as interest expense. And then next, we are going to need the total debt. So let's look at the balance sheet, and we can pull out the same date from the balance sheet. And in here, we have the total debt. So we can just go ahead and use that. If you didn't have the total debt, then you could add up the long-term debt and the short-term debt in order to get the total debt. But here we already have it as a line item, so I'm just going to use that. And so I'm pulling out total debt, and we are able to get that. So total debt. And now in order to get the pre-tax cost of debt, I can just take the interest expense divided by the total debt. And that will get our pre-tax cost of debt. So there it is 1.1%, quite low, but it's Walmart, so it makes sense. And then next, we are going to have to figure out the after-tax cost of debt. And in order to do that, we need the tax rate. So the tax rate we also need to calculate from the financial information. So we can go back to the income statement and look at the appropriate date. So in this income statement, what we want to do is take the income taxes that were paid and divide those by the earnings before taxes from which the income tax payment is calculated. So first, we can pull out the income tax. Here it's called income tax provision. That would be the amount of taxes that were actually paid. So tax paid is going to be that. And then we want to pull out the EBT as the other item. Okay, so now we have the EBT. And so when we take the tax paid and divide it by the EBT, that should get us the tax rate. And that's 25%, which sounds like a reasonable tax rate. Okay, so now we can go ahead and use the function that we already created in the last exercise, show cost of debt. And I can call that with the new pre-tax cost of debt and the tax rate. And there we can see that the pre-tax cost of debt is 1.14% and the after-tax is 0.85%. I'm just going to go quickly modify this to also print the tax rate. Okay, and so then when I call this again, it will also say that effective tax rate that we found as well. So that wraps up these two lab exercises and the two approaches on how to calculate the cost of debt. So thanks for listening and see you next time.